While the rest of the world grapples with inflation, China appears to be sliding into deflation. Consumer prices fell in July. Factory gate prices also extended declines last month as the world's second largest economy struggled to revive demand. The National Bureau of Statistics said Wednesday that the Consumer Price Index dropped 0.3% year-on-year in July. It was the first decline since February 2 years ago. The Producer Price Index also fell for a 10th consecutive month, down 4.4% and faster than forecast. Markets are worried China has entered an era of much slower economic growth similar to Japan's lost decades. That saw consumer prices and wages stagnate for a generation. China's post-health crisis recovery has slowed after a quick start in the first quarter. Demand at home and abroad weakened and policies to support the economy failed to shore up activity. The data comes a day after the trade figures showed exports and imports both slumped in July. For now, authorities are downplaying concerns about deflation. Last month, the central bank said there would be no deflationary risks in China in the second half of the year, though it did say the economy needs time to return to normal after the health crisis. Now there is pressure on Beijing to release more direct policy stimulus, as the stock market is mostly underwhelmed by the lack of firm action. Policymakers have recently announced measures to boost sales of cars and appliances, but some market participants say stronger stimulus is needed. Investors have waited for policymakers to inject stimulus after last month's Politburo meeting.